Hello everyone and good evening. Welcome to Startup Central, the first and only daily show in India that's dedicated to startups and entrepreneurship. I'm Avan Dabash. Well, let's take it straight to our top story, and yes, it's been another high-profile exit at Facebook's WhatsApp. As the Chief Business Officer and employee number 4, that's Neeraj Arora, has quit the messaging platform. Do remember, the company also saw the founders leave months after the $19 billion acquisition by Facebook. Let's get in my colleague Rahul Dayama, who joins in with all the details from Bengaluru. Rahul, the timing really of this exit raises quite a few questions, especially when the payments business is facing hurdles in India.
Avan, that's right, questions being raised because it's a series of top-level exit that we've seen at WhatsApp after it was acquired by Facebook. Remember, even the founders of WhatsApp went on to leave the company openly, sort of also coming out during the Cambridge Data Analytica scandal saying, uninstall Facebook. Also, there have been differences over the WhatsApp founding team on ad sales, really, because what Facebook has sort of shown interest that WhatsApp will sort of feature and innovate how ads can be subsumed into the event, into the platform, and that really generating revenue. Coming back to this big exit, Neeraj Arora, and why it's important from an India standpoint, because he has largely been credited to sort of set the ball rolling for WhatsApp as far as payments in India is concerned. We are picking up from our sources that is exit was planned for over a year now, but in day-to-day functioning of the payment business here in India, he hasn't been involved over the last 1 year, but he's credited largely to have ensured that the Facebook acquisition of the messaging platform happened in the manner that it did. He was largely touted to also be the CEO after the founders stepped down. That did not really come by. From an India standpoint, apart from really rolling out the payment feature here, he's also an active investor in startups like ClearTax, GoKey, Traction, and others, even Zomato and Grofers. Really, that we are expecting likely to continue. He was a board member on Paytm. He sort of stepped aside after the WhatsApp payment launch to avoid differences, conflict of interest, really. But a big exit for WhatsApp. We'll have to wait and see with the new India head, Abhijit Bose. Will they be able to tide over the regulatory hurdles, really?
Yes, that'll be important to see, and we'll have to wait and watch as to what the road ahead is. But in the meantime, let's get in Manish Kumar, who is convener at the Fintech Forum, who's now joining in on the show to chat a little bit more about this exit. And Manish, thank you so much first up for taking time out and joining in on Startup Central. I want your first reaction to the exit of Neeraj Arora, because we have seen a series of high-profile exits at Facebook in the recent past. Is this a sign of some sort of stress building up between Facebook and WhatsApp, you think?
So this is news to me as well. So it's a hot item today. However, I wouldn't start to put some kind of negative attribution to that as yet. The short message written by Neeraj, on his Facebook account doesn't show much of reasons to quit, or so basically any negative thing that we speak about might be speculative. He might also be leaving because of good reasons, and if that is so, I think we have a lot of reasons to rejoice when high profile startup founders and senior execs like Sachin Bansal, like Neeraj, etc., come back to the ecosystem, and they are more useful not to one company, they are more useful to the ecosystem. For example, Neeraj can go back to Paytm. Neeraj can start investing in companies. So I would rather see the positive side of it, and that's a happy news. So we've got Neeraj back to us in some sense.
But no, the reason I ask, why this is, sort of timely, because it's at a time as well when the payments business is seeing hurdles in India. And we're talking about employee number 4 exiting the company, which is why this exit assumes a little more importance.
Yes, so it might be attributed not particularly to Neeraj. I think the whole Facebook management team is under deep duress right now. Questions are being asked, in number 1, number 2, and I think, the number 3, number 4 also follow. So I think Facebook itself might be going through a churn or a management crisis of sorts. Particularly, if you ask me, is it about particularly Neeraj, being singled out or something? Per se, I don't think we had any reasons to look at that, that way.
Okay, now you had him leading the payment efforts for WhatsApp in India, at least at the start. Does this come as a blow for WhatsApp's efforts completely, especially when we're talking, as I said, about this backdrop of regulatory concerns? So is that going to come as now a bit of a setback given he's exited?
I would guess so. But WhatsApp had already rolled out its payment platform, but however, they really could not make it a mainstream payment product yet. They had still been toying with smaller payments, etc. So there are some challenges that they have been facing, especially in terms of compliances, etc., which I don't know where they stand. Some time back, there was news that WhatsApp will comply with all the directives about data localization, etc., and that is a larger clout that Facebook is facing nonetheless. And what really prompted his exit might be internally him not being able to scale up as much as other payment providers have done that. But that is only speculation. WhatsApp did launch the product; it didn't scale the product fully. And there were concerns around data localization, which so far it has not, and NPCI did come out saying that it has not completely complied with that. So it might be one of the reasons to do so. It might be the new CEO of WhatsApp that Facebook designated would have wanted some other, change of guard to handle the payments focus. So it can be any of these reasons, So what I'm trying to avoid here is pinpoint that to any single attribution, So because I think this may not be as pushy or acrimonious as we may, sometimes see.
Okay. Now, WhatsApp has also announced an India head, a major demand by the Indian government. So, Abhijit Bose, he has a payments background too. Do you think that his appointment is going to help be a big push for payments for WhatsApp now?
I think so. I think Abhijit, being a homegrown boy who has built a payment business, etc., might have a much greater bearing on the success ratio. The problem, I think, is twofold. There's a global giant which not only in the payment industry, in the normal social media industry, is embroiled in controversies around how they use data, etc., and to top it out, here they have a subsidiary, WhatsApp, and that too in the Indian part, the RBI talking about data localization and data residency. Now, in that context, will Facebook, which is entwined with WhatsApp data, want to do that or not? I think the challenge was not, from the Indian regulators allowing or not allowing. They have been very clear, and all those who are complying, they are all complying very well. I think the challenge is navigating between Facebook and WhatsApp India, complying. The challenge is more internal to Facebook, where they have to take a call.
So what's the need of the hour then, if you're talking about the challenges being more internal when it comes to the company at a time when we are seeing this payments push really being taken full throttle by WhatsApp?
Yeah, so WhatsApp will have to take this decision fairly quickly. I think along with the change of guard, these decisions will become very important. I think WhatsApp is a very big, India is a very big market for WhatsApp, and WhatsApp Pay can be really, really effective. None of these players really want, the other competitors of, in the payment space would want to avoid as much as WhatsApp can be avoided in the payment business. That is the external competition front. But internally, I think they have to take a call whether they can possibly agree to RBI's norms and requirements, and how much they want to get into the payments kind of business. So they have to take that strategic call, and if required, they should delink the payments part from the other data, and probably keep the payment data only. RBI is only concerned with the payments data and not with other chat and encryption and all that. So they'll have to figure that out somehow. And I think it is doable, but I don't know what their challenges are in taking a resolve on that.
All right. Thanks very much for giving us your sense, Manish. So it's not all gloom and doom, you think, for the company. And of course, moving on to bigger things, perhaps that's what's in store for Neeraj Arora. Well, that was the big exit at WhatsApp, and we discussed it in great detail. But let's move on then and talk a little bit more about Flipkart, and India's most high-profile entrepreneur. Sachin Bansal is gearing up for a second innings after exiting from Flipkart. In fact, ET reports indicate that Bansal is eyeing the fintech and the agri-tech space for a direct acquisition as well as some investments. In fact, he's already established a holding company with Ankit Agarwal, IIT alumnus and former director of Bank of America. Remember, Bansal made an exit of $1 billion for his 5% stake. He's also been considering funding in startups like Ola and Ather Energy. It will be interesting now to see how the second innings pan out for Sachin Bansal. On that note, we take a quick break then right here on Startup Central. Do stay with us. On the other side, we have lots more lined up. Amazon striking a future deal. Is that on the cards? And we tell you a little bit more about Jack Ma's plans coming up. Welcome back. This is Startup Central. Well, we've certainly discussed exits in great detail. Let's focus in then on new plans. And we understand that Future Group's founder, Kishore Biani, is negotiating a wider agreement with Amazon that will provide the company the option to buy him out in the future. Let's bring on board Arjit Burman from the Economic Times, who has all the latest details. Arjit, walk us through, what this deal entails and what, it could bring to the table for the company.
Mr. Biani clearly is trying to seal the future of his retail empire with Amazon, no pun intended there. But that's the reason why he is taking so long to actually, stitch it together, because it's not just one small equity investment that gives Amazon a toehold. It's a far bigger strategic alliance that Mr. Biani and Jeff Bezos of Amazon are trying to stitch together. It complements exactly with what Amazon is trying to do, push its payments business, push its online sales. So that is why we are looking at a far bigger holistic alliance.
All right, let's move away then and focus in on tech giant and China's richest man, Jack Ma. He's a Communist Party member, and he's revealed the official party, that's been revealed by the official party newspaper. In fact, Jack Ma's name is in the list of 100 people that have helped drive the economy. The list has been revealed by the People's Daily, and Jack Ma's affiliation comes as a surprise to many people because he's always been a man with absolutely no political stand in the past. This also comes amid the push by Beijing to bring the country's private enterprises more in line with party values. Alibaba's CEO has acted as an advisor to many political leaders in Asia and in Europe, and has also fostered big ambitions in the United States. In September, Jack Ma had announced that he would step down as Alibaba's CEO next year. Well, let's move on. And legal and compliance issues have become core to startup operations in India. But what can entrepreneurs do to be on the right side, especially during due diligence and negligence for acquisitions? My colleague Rahul Dayama caught up with Rajiv Khaitan and Ganesh Prasad, partners at Khaitan Company, for a conversation. And interestingly, Khaitan Company were the advisors on the Walmart Flipkart deal, which was one of the biggest M&A deals in the space. Let's listen in to that interesting conversation.
What we see here is a lot more sophistication in terms of products, and it's also possibly a reflection on India's growth story. And I guess we have had to sort of catch up with the times in terms of not only sort of being able to service this explosion of growth, and also at the same time keeping in line with the needs of sophisticated businesses.
Got it. Sir, I'll come to you. Would you agree that there's a lot more awareness among these smaller, new age companies, startups, so to say, about getting, corporate governance right?
There's a perceptible change in that, because, as they have learnt over experience by understanding from what has happened in the previous transactions, the diligence that any acquirer does is largely also on the corporate and the governance side, and therefore a lot more record keeping, a lot of regulatory compliance is now being adhered to by startups. This trend is going to only increase, and this change is not only happening in the startup space but even in the companies which acquire funds, which fund them.
Would you agree that this would sort of have a ripple effect? Where do you see this going? Over the last 2 years only, we have seen some big exits, for investors. Is that signaling that, we'll see a lot more consolidation on the ground as we really move ahead into 2018?
Yeah, I think consolidation is the name of this game. What we also see is that as the India story is projected to sort of go into trillions of dollars, possibly in the next 5 years, you will see a lot of new age companies emerge and a lot of value being created. At the same time, consolidation is going to be the mantra for the ecosystem.
When you sort of engage with investors, foreign companies that are sort of looking at acquisition, what's the complaint that you offer here about India? Has it become a lot more easier for them to operate?
Some of the sophisticated investors do believe that the record keeping and the type of information that is made available to them is not as much as they would want to. But over the years, Indian startups have also been mentored by people who have done it in the past. Organizations like iSpirit have really helped them understand the requirements for a consolidation between two startups by a takeover by a larger player. So learning has improved a lot in the last few years.
In particular, when we talk about startups and these tech companies, what are these big trends that will stand out as we really go ahead?
So I think one trend which possibly will be very important as we progress would be ethics and compliance. Because I guess globally, most companies have zero tolerance for any violation towards ethics and compliance. And I guess rightly so, that's the only way you can sort of get the culture right in a changing world. And in addition to that, I guess we also will look at spending patterns and of supply and demand. As supply and demand changes, you will possibly look at a lot more complexity coming with technology.
What is that one or two tips or advice that you'd want to give them to be on the right side? I'll come to you in terms of what advice you would give them to have these big exits and ensure they're on the right side of the deal. But quickly, 2 tips from you.
Believe in yourself. I think most startups, after reaching a particular stage, start wondering whether they are doing the right thing. And at that stage, a help from people who have done it in the past really helps them continue in their belief and ramping up what they are doing. They've grown from stage A to B by what they have done. But for going from stage B to the next stage, some different skills are necessary. And at times, these startups don't engage or bring on with them people who have experience to go to the next level.
What should they be doing for big companies like Walmart to keep an eye on them, and what should they do to get such instances right, or be prepared for them?
See, I don't think there's any one size fits all, but I guess value creation and ethics, I guess so long as you're able to sort of look at ethics, compliance and value creation for the end consumer and also for all stakeholders, I guess people will be afloat. And I guess that is the long-term plan for anybody who is entering this market.
All right, that's an interesting conversation there, but that's all the time we have right here on Startup Central. Thanks so much for watching.